Hey guys, welcome back. So in this episode, I wanted to just hit record and talk to you guys about what's currently going on in the market, as well as what I've been doing in the past few weeks or so. Now, as of today, March 9th, the S&P is up over 2% and the Nasdaq is up over 4%. So we've seen a nice, healthy rebound, and it looks like things are starting to go back to normal and things are starting to stabilize a little bit. So if you guys have been on YouTube for the past couple weeks, you've probably seen a whole bunch of videos talking about the impending stock market crash. And although those videos are pretty entertaining and get a lot of views, honestly, it's a lot of fear mongering, and they honestly say the same thing, talking about how the only thing you should do is buy and hold. So in this episode, I'm not going to be talking about that. I'm sure you guys already know buying and holding is the best investment strategy out there. What I want to do is talk about my investing strategy moving forward, as well as several different stocks that I've been adding to my portfolio. Now, as you guys know, I spent a lot of my time focusing on growth stocks, and most of my investments are actually in either technology stocks or growth stocks. So in this past week, I've been taking a pretty big L as a lot of these growth stocks have seen a pretty big fall from grace. However, I feel really confident in these picks, so I'm going to be sticking with them for the long term. Now, in the past few weeks, I've actually been changing up my strategy just a little bit. I'm still focusing on investing in growth stocks. However, I'm not trying to put too much into speculative stocks, as those are really the ones that get hit the hardest during volatility and during these market crashes. So I'm actually rotating more into growth value. Now, for those of you who don't know what growth value is, it's still investing in companies that are growing very rapidly and seeing double-digit revenue growth. However, they're actually pretty attractive on a valuation basis. So what I'm doing is investing into companies that are still growing very fast, but seems to be undervalued comparatively to other stocks in their industry. And the reason I'm doing this is because I still want a lot of the upside that growth stocks have. However, I want to limit my downside, as well as getting into companies that are already pretty undervalued will help minimize the downside if there is another stock crash again. So where does that lead me? Well, that actually leads me into two different stocks that I've actually been scooping up quite a bit of shares in. Now, the first stock is Corsair Gaming, ticker symbol CRSR. And I'm sure a lot of you have already heard about Corsair Gaming, as it's heavily covered and they IPO'd just last year, so there's been a lot of PR about this company. Now, if you haven't heard about Corsair, Corsair is a gaming hardware company, so they create different hardware devices for gaming, such as mouses, PC components, and the list really goes on. Now, Corsair has seen a big boost in their underlying business during the pandemic, as a lot more people have been staying home and have been wanting to look for other things to do, and gaming has seen a huge rise in popularity during this time. So of course, Corsair Gaming has seen a huge acceleration to their business because gaming has seen a big boost during this time. And what this has translated to is about 70% growth in their year-on-year revenue, which is very impressive for a company that's doing over $1 billion in sales. So clearly, Corsair is doing really well right now, as they're seeing very strong revenue growth, and they've already seen profitability in the last few years. Now, what's really exciting about Corsair is not only this revenue growth, but also their valuation. Now, Corsair is currently sitting under a price of sales of 2, which, given its growth rate, is very attractive of an investment opportunity. Now, one of the main reasons that I believe is leading Corsair to be undervalued in this market is that a lot of people believe that this acceleration to their business is strictly due to the pandemic, and they won't see strong revenue growth moving forward. Analysts actually have this stock growing at around 11 to 12% year over year in 2021. And compared to the revenues of 70% last year, that would be a huge deceleration. Now, of course, I don't think Corsair is going to be putting up 70% revenue growth numbers. However, to say that they're going to go only to around 11 to 12% this year is pretty mind-blowing to me. I honestly don't think that's going to be true. I think they're going to blow out those numbers out of the water. They're going to get at least 20% revenue growth. And as more and more people understand that Corsair is here to stay and is not just a gaming fad due to this pandemic, I really do think they're poised for success for this next year to come, and honestly for the next 3 to 5 years to come. Now, I'm not going to dive too much into Corsair Gaming. If you guys want me to do a full in-depth breakdown, let me know in the comment section down below. But I'm going to move on to the next stock that I've been buying. Now, the next stock is Shift Technology. Now, since Shift is a very small company sitting under $700 million market cap, I'm sure many of you haven't even heard of it yet. So what Shift does is they're an online platform that connects people to be able to buy and sell new and used cars. The company was founded in 2013 and is headquartered in San Francisco, California. Now, let's be honest, Shift doesn't have the most exciting technology, or it's not the most exciting company out there. However, I do think this company is very undervalued and they are going to see a lot more growth in the future. Now, Shift has had a pretty volatile past year and is actually trading under its IPO price when it IPO'd about last year. And the thing about Shift is that it's not really getting that much attention or that much love in the market, as opposed to other car companies such as Carvana, which has done really well in the past few years. Now, one of the main catalysts that actually got me to invest in Shift was actually their most recent quarterly earnings, which I'm going to dive into just a little bit for you guys. Now, they achieved record revenue and units sold levels in the fourth quarter with year-on-year revenue growth of 168% and 147% respectively. Now, what's really impressive to see is their outlook for both Q1 2021 and for the full year of 2021. Now, they provided the guidance of next quarter Q1 for revenue in the range of 90 to 95 million, which is an increase of 200% to 217% year over year. Now, for the full year 2021 guidance, they expect revenue greater than 450 million, which is an increase of 130% year over year. So clearly, Shift is killing it right now. They've seen huge demand in their overall products, and they're continuing to execute on their further growth plans. They upped their revenue guidance, and they're growing over 100%, so it makes me feel really good that this company is growing very fast. Now, for the full year revenue guidance of 2021, they're targeting around $450 million. Now, for their market cap, currently sitting at around $650 million, that puts their price to sales at a little less than 1.5 times 2021 revenue. Now, given their impressive growth rates for the last quarter and for their future guidance into the next year, to me, this seems very undervalued, and that's why I actually decided to build a position in Shift Technology. So there we have it, guys. I wanted to quickly talk about some of my thoughts on the market, as well as some of the companies that I've been buying into. Now, I still plan on investing into exciting, early stage, innovative companies. However, I am starting to take more of a conservative approach by investing into these growth value stocks, as I still think there's a lot of upside to them. However, the downside is a lot more mitigated, and I feel like the risk to reward right now, given all this volatility, makes it a much more compelling investment. So there we have it, guys. I wanted to kind of just talk to you guys about what I feel about the market and currently what I'm doing right now. I would love to hear what you guys think about the current market climate and what you guys actually are doing with some of your stock picks right now. With that, guys, thanks as always. I'll see you in the next one, and let's go get that bag.